Saturdays. You can't lose money on Saturdays unless you're in Bitcoin, which if you are down 2.3% right now. How's it going, everybody? Well, I'm gonna just be filming a little bit of a stream of consciousness video today. Just on, the markets. So I want to talk about where the markets are right now, where I think the markets are going to be going, and how to prepare for the markets, and how to get in the right mindset for this sort of market, right? I mean, I'm saying the word market a lot because that is what the subject is about. Where the stock market's going in probably the near term. So we can talk about that, and then we talk about the long term. All right, guys. So I think with what is going on right now, so we're the market's afraid of inflation, and inflation right now is pretty rampant right now, and the Fed and the media has been saying that inflation is transitory. I am in that camp. I do believe that inflation probably will be lower at the end of the year than it is right now. Definitely probably steady out in the next 1 to 2 years, and then we can probably be back on track when it comes to inflation. But I just think that in the short term, we're going to have this ebb and flow in the markets just due to the CPI reads that are coming out month over month, and we also have the GDP read at the end of July, so that we'll actually see if we're officially in a recession. So that's another one of the fears, is that are we in a recession? Is recession imminent? But just based on inflation, in the short term, we're going to have that ebb and flow. So I think the market can go very volatile to the upside and very volatile to the downside. So long-term investing wise, thinking as a long-term investor, you got to build out those positions during the tanking of the markets. Like just a very, very nasty down days, when we have those, take that opportunity to add to your current positions. So for example, yesterday we had a huge just like axe to the downside in the markets, and those were those types of situations where you want to just look at the companies you want to own for the long term and just take a bite out of them. We're conserving cash here. This might go on for a long time, so you got to be prepared for that. So yeah, that is what I'm doing with regard to the market. I imagine probably the whole summer, we're gonna be doing just ebb and flow, and so take advantage of the bottoms there. So diving deeper into how I plan on allocating my cash going forward. So, very recently I see companies. I mean, I just like looking at companies and identifying if their businesses, have long-term trends that I can just, enjoy and just, bet on. Pretty much investing is pretty much like high-level thinking betting. So you're just, betting this company is going to do good in the future just based on things today. And it's so fun. I mean, I love owning stocks, and I love owning companies, and just saying, I like walking into Costco and be like, man, I own this place, and I see the business is doing well, and I can see the stock price is tanking, and this doesn't make sense to me. If the company is continuously doing well in their business and continuously pumping out better products, I think that is a good investment, and you just gotta find that company in the stock market, and then when you identify the price is at a good price, or you're actually getting a good deal, I think you just build a long-term position there and just hold it, and just buy the company and just hold it until it matures. And when a company matures, then it starts paying you money back in the sort of dividend, in the ways of dividends and in the ways of stock buybacks. So man, it's just a beautiful process, just owning something and just growing with it. You growing within your life, and that company growing in its business cycle as well. So yeah, a little bit of ways that I'm going to be allocating my capital is focusing the majority of my capital on those long-term positions that I just mentioned. However, I like taking some more riskier positions, and so I will be buying into riskier positions at certain points in the market where it's just like the bottom of the market. Like for example, again, yesterday, like we tanked really hard. So I mean, if I can identify the bottom of that day or that week of when we tanked really hard, I think I'll nibble on my riskier positions. And these riskier positions consist of companies like SoFi, Palantir, UiPath, Figs, Allbirds, Endeavor, and even Berkshire Hathaway. You know, I don't want to own too much of Berkshire Hathaway because I don't like insurance, oil. I don't like a lot of their holdings, but I do like some of them, and I want to hold on to them. And just I want to kind of say that I own Berkshire Hathaway because it's such a great company and a great history. I want to own that, so I'll probably buy 1 or 2 shares of that company. But I do buy, I mean, if you guys been following me some time, I do buy every single day the market's open. So I'm thinking about just adding to these companies as they, you know, ebb and flow as well. But, you know, I always will be buying these companies. You know, the riskier companies, I'll just buy at the bottom of these tanking market days that I'm expecting. It's not really guaranteed. The market can go anywhere, but this is what I'm kind of feeling. So this is my game plan for like the worst case scenario or a bad scenario. So I'm always going to be adding to companies like a PayPal, like a Microsoft, a Starbucks, a Costco, a IPR, Amazon, Google, Tesla. These companies that I want sizable positions in. The other companies, riskier ones, I want little positions because I like probably the brand or kind of like the company's business plan. I want small positions, but these Costco, IPR, Amazon, I want big positions. So I'm gonna build out big positions there. All right, everybody, have a good one. I'll talk to you later. Bye.